Breaking news this morning. Look out below. Take a look at U.S. stock futures. All markets on edge and dropping. These futures just took a notable turn downward.
In the most significant escalation of trade war between the U.S. and China, Beijing imposed retaliatory tariffs on 34% on U.S. imports on Friday.
After the speech, Trump signed an executive order. With one stroke of the pen, he ripped up the global trading order. He effectively started a global trade war, and at the center of it are reciprocal tariffs.
The countdown is on to Donald Trump's so-called Liberation Day. In just 12 hours' time, the president will announce sweeping global tariffs on products imported to the United States.
American allies, in addition to, the...
Nerves are shattered, trillions vanish. The world's two economic titans are locked in a no-holds-barred trade war, and Wall Street is paying the price. For the second day in a row, U.S. stocks are plunging into chaos. The Dow has already nosedived over 21,000 points from today, adding to yesterday's historic 1,700-point collapse. But this isn't just a market crash. It's a full-blown economic showdown. Why? Let's break down the bombshell moves that sent shockwaves across the globe. It all started with a ticking time bomb. On April 10th, the Trump administration dropped a financial hurricane on global markets, the rougher Independence Day tariffs, a sweeping 50% levy on $50 billion of Chinese imports. The White House called it a liberation from unfair trade practices. But Beijing, they saw it as a declaration of war.
Chicken war, they were only imposed on around 7% of U.S. imports. Trump's plan for a second term is to bring them back dramatically.
This is the policy that built this country, and this is the policy that will save our country.
He's proposing a 60% tariff on everything from China and a 10 or even 20% on every import from every other country.
Countries are going to finally, after 75 years, pay us back for all that we've done for the world.
Washington's targets were brutal. Semiconductors, machinery, electric vehicles. Sectors where China dominates. But the move backfired. Fast. Within 24 hours, Wall Street imploded. 3.1 trillion vanished in a single trading session. The worst single-day meltdown since the 2008 crisis. And China? They weren't bluffing. At dawn on April 4th, Beijing struck back. A 34% tariff. A surgical strike on America's economic weak spots. Midwestern soybeans, Detroit-made cars, Silicon Valley tech. Guinea. The message? You hit us, we hit harder.
President Trump is now promising a new 50% tariff on China, on top of the other new tariffs, which are on top of existing tariffs. Combined, this would make U.S. tariffs on imports from China a whopping 104%.
Farmers in Iowa watch their livelihoods evaporate. Auto giants like GM and Tesla braced for sales to crash in China, their largest market. And big tech, Apple's iPhones, already struggling in China, now face a 34% price hike. Overnight, supply chains snapped, investors panicked, and the Dow, it plunged 1,700 points. A bloodbath dubbed Black Tuesday. The U.S. slapped tariffs on 300 Chinese products on. China retaliated with 106 categories of American goods. But the damage wasn't just in numbers. This was a psychological blow to markets. Fear spread faster than the tariffs themselves. By April 5th, futures turned crimson, signaling another day of carnage. U.S. farmers face ruin as China, their biggest buyer, slams the door on soybeans and corn. Auto giants like Ford and Tesla are trapped. Their cars just got 34% more expensive in China, crushing sales. And big tech? Silicon Valley's profits are dangling by a thread if China retaliates further. But the scariest part? This might just be round one. Analysts warn of a 40-50 billion trade collapse, layoffs and prices soaring for everyday Americans. Is this the start of a recession? China, meanwhile, appears determined not to blink. In state media, the message is unambiguous. If the U.S. escalates, we will escalate equally. Beijing is reportedly preparing massive stimulus packages to shield its domestic economy from the fallout, shifting focus to domestic consumption and expanding trade ties with Europe, Africa, and Southeast Asia. Already, major Chinese companies are being encouraged to de-Americanize their supply chains. At the same time, Chinese buyers are being incentivized to favor non-American goods wherever possible, a strategy that, if prolonged, could permanently shift global trade patterns and weaken the United States' role as the center of global commerce. In Europe and Asia, governments and corporations are scrambling to assess their own vulnerabilities. Japanese and South Korean companies that rely on integrated U.S. China supply lines are caught in the crosshairs. European firms, wary of rising costs and tariffs, are rethinking production and distribution models. The ominous term second bottom now circulates widely on Wall Street, a chilling reminder of how quickly panic can feed on itself. The collapse of $3.1 trillion in market value, followed by another steep decline after China's move, has left investors bracing for further shocks. Some now speak quietly of third and fourth bottoms on the horizon, as the scale and consequences of this conflict become clearer. If tensions continue to escalate, a full-scale global recession could become unavoidable. Protectionist spirals historically lead to plunging global trade volumes, corporate bankruptcies, widespread unemployment, declining living standards, political instability. The lessons of the 1930s Great Depression, when tariff walls strangled international trade, loom large. Yet the stakes today are arguably even greater, given the deep interdependence created by globalization. In the U.S., political pressures are building. Farmers, manufacturers, and tech companies, many of whom initially supported tough rhetoric against China, are now realizing that they are bearing the heaviest costs. As prices rise, jobs are threatened, and inflation bites into household budgets, the American public may begin asking an uncomfortable question: what have we gained? For the Trump administration, the political gamble is immense. While appealing to nationalist sentiment and promises of economic liberation, the realities of an interconnected world could turn victories into Pyrrhic ones. No one wins a trade war, economists warn, and the longer this battle drags on, the greater the damage to both economies and to the world. As of today, the road ahead remains perilously uncertain. The markets are trembling, businesses are bracing, and policymakers are scrambling for strategies. The trade war of the century has begun, and its final consequences are still unknown.